And as we saw in that report, about 8% or more than 25 million Americans don't have traditional bank accounts. And even those with bank accounts may struggle to obtain a traditional bank loan. Many individuals and business owners aren't able to get funding from a bank for a variety of reasons, and they turn to alternative lending. And to talk more about this, we're joined by Chris Delaney. He is the CEO of Alternavest. Chris, thank you for joining us.
Thank you for having me.
Chris, why are banks so reluctant to lend?
They find with the small businesses that there's a lot of risk to invest with them. And so what they do is they try to stay away from lending hundreds of thousands of dollars to small businesses. So individuals come to Alternavest to look for alternate ways of receiving money.
So people like you then are able to fill the void. What is the most popular type or the most popular types of alternative investing options? The
three popular are promissory notes, which are very popular
lending.
For the alternative lending, correct. So promissory notes, and you have merchant cash advances, and another is obviously small business lending.
So what does that mean? What does a merchant cash advance mean?
Merchant cash advance, in general terms, we would provide funds to a small business, and in return, we receive a percentage of their daily credit card income. And we receive those funds directly from the business's credit card processor.
So that minimizes the risk of a default on your end?
Correct, correct.
What is the advantage for the borrower to come to an alternative lending fund as opposed to a bank?
Well, generally we provide faster services for the borrower, where a bank has a bunch of red tape, and the high decline rate, they come to alternate lending practices. So they'll come to someone like Alternavest Funds, and we can process loans in sometimes less than 7 days. And we have flexible underwriting where banks are very stringent on where and who they lend money with.
So what does it mean for small businesses that they're able to get this kind of funding? Where would they be otherwise?
Well, if they don't receive funds for growth, then what happens is that it has a direct impact on the U.S. economy, because if small businesses don't grow, neither does the economy.
But what is the average interest rate that you would charge a small business that's looking to, say, borrow $100,000 to expand a restaurant operation, for example?
So generally what we'll do is we look at their risk patterns, and we look at their bank statements, and we look at their FICO scores, their credit scores, and we'll determine, depending on the risk, we can charge anywhere from 15% upwards and a higher rate.
15%, it's a pretty steep rate. What do you say to people that say alternative lending funds such as yourself take advantage of borrowers by charging these exorbitant rates?
Well, they're not exorbitant. If you can't find a traditional bank to lend you money, you have no other source of way to get funds for your business. So we do charge a higher rate because we do have to factor in people that they foreclose or they discount on their loans. And
what is the typical ratio of defaulting?
5 to 10% is what we see, so we have to factor that into the loan itself. So while people feel that it's exorbitant, what we say to people looking for funding, alternate funding, is to go do your homework, check around to see, because there's so many that are in the space, and they have platforms like Lending Club, where they also lend on an average of 14%.
Well, you mentioned Lending Club, and there's also On Deck Capital. We've seen a tremendous proliferation of these sort of peer-to-peer lending institutions. Why are we seeing this?
Well, because traditional banks are not lending anymore. So this is a great opportunity for borrowers because they have many platforms to go to look to get the alternate lending.
Well, you mentioned the borrowers. What does this mean for the investors, though? What kind of return would an investor that puts money into an alternative lending fund get?
Well, we see what we're doing is we're filing with the regulators because we're opening up our own passive income fund. And after we have filed with the regulators, we're looking to see about an 8% return, preferred rate to our investors, with a 20% equity on the profits of the company at year end. So in essence, you could be seeing anywhere from 11 to 12% return a year.
And if somebody wanted to get into this as an investor, what would be the first step?
Well, obviously, they would call someone like Alternavest. You come to our website. There are other companies out there that do the same thing. We feel we're the best, and we combine many companies to make ourselves more attractive to investors so they can come to our website.
All right. Thank you so much, Chris Delaney, CEO of Alternavest.